Welcome, everyone. I'm really excited to be here today, interviewing someone who I consider a friend, been a partner. And I was talking before this webinar started with Renaud, and I think he and I share, we were at the earliest and the longest running meetups in the fintech industry back in 2012. And so really excited to be here with him today. As I said, aside from our partnership, our friendship, and long-standing relationship, Renaud is one of the earliest founders within what we call today the fintech industry. And I think the insights he'll be able to share with us today will be invaluable, both from a business standpoint and just a personal experience standpoint. And so I'm really excited to be here with you today. My name is Adam Goller. I run Fintech Banking at Crossover Bank, and I've been with the bank since inception in 2008. And I run all of the bank's fintech partnerships. I'm going to ask Renaud to give a brief background on himself before we start the webinar.
Hi, good morning, Adam. Thank you for having me. It's great to be here and be doing this with you. I mean, as you said, we go way back. Yeah, my name is Renaud Laplanche. I'm the co-founder and CEO at Upgrade.
So I will ask Renaud some questions to get started about really his history, his career. I would note that Crossover has really a really wide-ranging partnership with Upgrade. We power many of its lending programs. We power some of its deposit programs, work on some payments activities as well. And so excited to hear more about that. But before we go into the current partnership and some of the current products Upgrade offers, want to go back in history a little bit. Renaud is described really as a pioneer in fintech and a serial entrepreneur. So perhaps you can give a summary of your career prior to Upgrade, maybe going back to your early days out of school.
Yeah, I mean, so yeah, it's been quite an adventure over the last 30 years and like 17 of them in fintech. So I was trained as a lawyer, started my career at Clary Gottlieb, so New York-based law firm. Then left the firm and started my first company in sort of 1999. It was a software company, did reasonably well, not great, but good enough to be acquired by Oracle, which is when I moved from New York to the Bay Area. Spent a year at Oracle, and then really got the idea of Lending Club when I was in my living room. I had left Oracle already for what was supposed to be a 6-month sabbatical. So I had way too much time on my hands. I was opening the mail and was reading my credit card statement, which is something I would absolutely otherwise never do, and realized that I was going to pay 18.5% interest rate on my credit card. Obviously now it would be even higher with rates the way they are. But then the next piece of mail I opened was my savings account statement. At the time it was low rates, so I was earning 0.5% on my savings. I was really struck by that spread between the rates the bank would pay on the savings account and the rate consumers would pay on credit cards. And just started doing some more work and trying to understand the spread and where all that money was going. And quickly realized a lot of that was really due to the high cost of capital transformation from the bank, of really taking these short-term liquid deposits and transforming them into longer-term illiquid loans, and all the employees and the thousands of branches and all the infrastructure that goes into that capital transformation. So really Lending Club, my first fintech company, wasn't even called fintech at the time. It's 2007. The idea there was sort of really compress the spread and create this marketplace online that would connect so people with excess savings and people who need a loan, and help them transact directly. And that was the beginning of person-to-person lending that became over time marketplace lending. So was a very novel idea. 3 companies came up with about the same idea around the same time. Was Zopa in the UK, Prosper and Lending Club in the US. And I think Lending Club by chance so became the largest one, and by 2012, I think we were the sort of largest provider of personal loans in America, so larger than other banks. We really brought back the sort of personal loan product to the forefront of consumer lending, away from credit cards, and we believe it's a better, more consumer friendly and more predictable product than the credit card. And the company kept growing and up to the sort of Lending Club IPO in 2014. So a lot of sort of excitement there, and sort of too many anecdotes and happy times to talk about. Then in 2016, a lot of us sort of left Lending Club and started Upgrade. It's an all new adventure. I think we decided to build up on sort of 10 years of fintech experience at Lending Club and really sort of create a, I think, broader platform in scope that was going to focus not just on personal loans, but all kinds of credit products and also banking products, and really use sort of mobile banking both as a sort of customer acquisition play, also as a data play to sort of enable more credit and offer sort of more comprehensive sort of financial solutions to consumers, and really help them sort of make good decisions, move their finances in the right direction with responsible and affordable products, and sort of as much view into the sort of total consumer financial situation as possible.
That's great. And certainly it's been a long journey. And like I said, we will go deeper into the Upgrade products, go deeper into the strategy behind how you're driving that forward, and also more about some of the products you offer. But before we get there, like I said, I want to know more about your background. So in one of your first fintechs, or your companies that you started, I know you had an experience where you had an office in the Twin Towers, and I know that it was destroyed during 9/11. So just setting a background, like, how do you describe that impact, noting that we have a current, global situation on many fronts, an economy that is in flux, and so noting how you deal with adversity would be really helpful for the audience.
That's right. So the software company I mentioned started in 1999 in probably February, March 2011. 2001. We decided to move into the World Trade Center. Some very nice offices, 53rd floor of the South Tower. The company was serving both media and travel companies, dual verticals. So certainly, I mean, so being in the World Trade Center on 9/11 was so very traumatic to us. We got incredibly lucky in the sense that we sort of didn't lose anybody. We lost a lot of paperwork and software. Some of it was backed up, some wasn't. A lot of learnings there for sure. But got very lucky not to lose anyone. For a combination of really, I mean, very sort of fortunate events. I was late to work that morning. I worked on a presentation like late the previous evening and slept through the clock. And I usually at the office at that time, and I wasn't this morning. And a couple more people who should have been there were not. So got very lucky there. And I think obviously the world changed very rapidly around us. Besides the sort of human devastation, there was an economic impact. It was very profound in a lot of industries. Travel was obviously one of them. And so we lost a good half of our business at that point. But I think we used that opportunity to sort of really come together as a team. And adversity is obviously challenging, but makes you stronger. And so having to sort of rebuild the company in a lot of ways, like rebuild the offices, rebuild the infrastructure, was a sort of bonding opportunity for the team. And we were not alone. I mean, there was like so much so much solidarity at the time. So many people wanted to help. We got a lot of like free software, free hardware, and a lot of help. Like another companies have hosted us for 6 months until we found more permanent offices. So there were obviously a lot of devastation, but a lot of hope that came from that experience, and I think a stronger team as a result.
Great. So one more background question. You mentioned sort of how you thought of the idea of Lending Club, opening an envelope in your house, but becoming an entrepreneur didn't happen overnight. And so maybe you had some other things or events in your life or things that got you to where you are today. Are there like 1 or 2 events or things that happened in your life that you think made you an entrepreneur? You mentioned you were educated as a lawyer. How did you become an entrepreneur?
Yeah, it's interesting. I've always been sort of fascinated by entrepreneurs. Even when being a lawyer is a great way to sort of have this develop close relationship with your customers and with your client, the firm's clients, and really sort of learn from them and understand what their life is like. And I loved being a lawyer, but as a lawyer, you're basically helping other people build their business, and you're building yours to some extent, but you're not really like bringing sort of new products to market and touching the lives of millions of people. You're helping do that, but I think I really wanted to sort of build something new, and took some time to find the right sort of combination of sort of people to be part of that adventure, the right timing, and obviously 1999 in New York was a perfect timing to start something new. But it's yeah, I think that sort of upbringing as a lawyer was useful in terms of this sort of connections I established with entrepreneurs, and in understanding that feeling that you get when you dream up a new product in your living room, and if you're lucky, a few years later, it's in the hands of millions of people who and you can really see like having an impact on their life. I think it's an amazing feeling.
That's really great. So we're going to jump into the products now in the current market, but I can't help but ask one more question. I know that you have a hobby of competitive sailing, and I know that you, over the course of your sailing career, have set 3 records. And so just curious how you got into sailing. Is that more of a hobby or a competitive hobby for you? Just describe how you got into that and what it does for you.
Yeah, no, I love sailing. I started very young. My dad took me sailing initially in the south of France, and we were doing like local races. Then I got old enough to get my own so small boats. I sailed sort of lasers when I started when I was 12, 13, up until sort of junior years. I got lucky to get a national sort of championship, junior championship. Then I sort of spent a lot more time on my professional career and less sailing. But I always like found a way to keep sailing from time to time and keep participating into regattas here and there with friends. And then back in I think it was 2014, 15, we had this idea of chartering a really big, very fast boat and going on a record-breaking program, and got lucky enough to break like these 3 sort of world sailing speed records. One of them still stands today, so it was quite a journey and an adventure. And then what I like about sailing is, I mean, it's very much like building new products or building a company. It's really a team effort, and you need to get a lot of things right. It's like sort of product, marketing, compliance, legal in sailing. You like the boat, the sails, there's the weather conditions, there's a crew, like all these things has to be right to produce the right result. And there are sort of many factors to take into account. Some you control, some you don't. But yeah, some similarities with business.
Great. That's a great transition to the navigating the current landscape for lending, which is a little bit rough. We have the macro economy, we have some geopolitical events, we have inflation, we have consumer debt, and a whole host of things which, weren't necessarily experienced in the first, I'll call it, perhaps 10 to 15 years of fintech. COVID was an event, but that actually spurred some growth out of COVID. And so we're dealing with a confluence of factors now that maybe it's impacting the broader market. Maybe you've led companies through different periods of the economy and different times where money's been cheap, money got more expensive. You've had consumers when they're strong, consumers when they're weak. How would you say, or what would you say contributes to your success in navigating these macro factors? And maybe if you can focus after that on how Upgrade specifically weathers these storms and what strategies you guys use.
Yeah, no, certainly. I mean, the recent environment, the last 18 months have been sort of unlike anything we had seen in fintech in the past. And I think part of the what needs to be done in such an environment is really to sort of recognize where you are in the cycle and sort of take the time to measure the impact short term and long term and make decisions that don't necessarily sort of maximize sort of immediate short-term input, but are right for the long run, right? So when we saw sort of rates getting higher, inflation going higher, and understood the sort of impact that was going to have on sort of consumers' ability to repay and on delinquencies, we started tightening. I think probably before anyone else. In total, we tightened credit by 65% over the last 18 months. It's certainly not a very sort of popular decision to make, and not one we did lightly, but that was the right thing to do to preserve a track record of performance and to sort of not make loans to people who couldn't afford it. And we sort of don't like declining more people, but that's I think that was the right long-term decision. And at the end of the day, the right decision for a lot of consumers who wouldn't thought they were they could have come through with their payment, but at the end of the day probably wouldn't have.
Yeah, that's great. That's actually a great point. And I think that running the business that you run, there's a number of parties, a number of metrics that sort of measure your success. One would be from an investor standpoint, from a capital standpoint, how do you return on capital? One would be perhaps from an investor standpoint, a loan buyer standpoint, how the loans perform, as you just talked about for a minute. But one of the other metrics that sort of would measure your success is sort of how the consumers react to the product, how you handle those consumers. When you get to a tougher economy, you're dealing with a lot more consumer complaints and consumer needs and demands. And how have your customers' needs maybe changed during these economic shifts? And then how do you know if you're doing the right thing for your customers?
Yeah. So I think, I mean, again, back to recognizing what environment you're in, what part of the cycle you're in, and the impact it has to your customers. I think high inflation, high interest rates have an impact on affordability of the loan itself, but also everything in these consumers' lives. And so it just got harder for everyone to budget, to stick to that budget, and to balance that budget, especially in the early part of that cycle when sort of price inflation was far outpacing wage inflation, and that got corrected since. But there was a sort of 9 to 12 month period where it was really the case, and consumers were losing purchasing power. So in a situation like this, you try to sort of do your best to help. So we came up with a couple of things. One was a sort of rewards program on credit cards. We call the unofficially called the inflation killer. Officially, it was called the life rewards card. And it was really focused on bringing sort of outsized cashback rewards in sort of spend categories that were the most impacted by inflation. So we said, okay, gas, groceries, healthcare, those are the areas where sort of consumers were struggling, and say, okay, let's do sort of 3% cashback rewards in these three categories, and then 1% in everything else. And as you know, I mean, the rewards programs, it's a finite pool of money. It's financed by interchange. So you have to choose how you spend it. But really sort of applying these higher rewards to the spend categories that was the most impacted by inflation was, I think, our way to help consumers really cope with that environment. So we did that. We also opened up a extra rewards program called Upgrade Shopping. That's a sort of series of card-linked offers, also sponsored by merchants, with sometimes 5, 10, up to 12% rebates at selected merchants, and that can be accessed for the Upgrade app. So I think category of combination of these two things sort of really helped our customers sort of better balance their budget, better sort of afford some of these some of these sort of basic goods that they needed in time of high inflation.
Yeah, those
And
are
then
all really good.
yeah.
No, go ahead.
And then you're asking how do you know you're doing
Right.
how do you know it's working? I mean, obviously, some typical measures of like satisfaction score and reviews, ratings, of net promoter score, right? Our NPS about 77 on personal loans, which is very high NPS. So I mean, all these sort of both quantitative and qualitative sort of feedback mechanisms really sort of help us understand that most of the time it's working, and when it's not, we make adjustments. I think another metric we started using recently is number of products per customer, right? So that's a sort of a way customers have to tell us that they like what we're doing is by sort of getting the next product from us. And now that we have a more comprehensive suite of products, and we're seeing this like number of product per customer sort of increase over time. And that's certainly a way for our customers to tell us that they like the products they have, and they are sort of excited about the next product offering.
That's great. I think that actually transitions well to the next question I had for you. And then you mentioned before about the credit tightening you did, sort of anticipating where the economy would go. Now we're in a situation where we don't know when rates will go down, if they'll go down, how much they'll go down. So you're almost in an unknown environment. And how do you strategically plan for the unknown? Meaning you're sort of like, in some ways you're guessing, but in some ways you have your bets that you're taking. And so when you think about how to plan forward for what the consumer will look like in 12, 18 months, you mentioned before that you have a number of products, which is one of the things that we love about Upgrade. They've several products that are facing the consumer, but how do you plan for the unknown?
Yeah, how do you? Yeah, I think I mean, in this environment where sort of credit is tighter, for sure, I think we put a bit more focus on those products that are least impacted by credit conditions. That includes mobile banking. So rewards checking, savings accounts was sort of a big area of growth, right? So that's probably the only product that benefits from higher interest rates.
Sure.
So I think we focus more on sort of rewards checking, where consumers have to spend no matter how high the interest rates are, and we can help them there again with better cashback rewards. Savings account where you get better deal like 5.21% APY now. So then it's something that's attractive and that helps also consumers form good habits in terms of saving more if they can. And also like from a business standpoint, like focusing on more secured loans, like auto loans, where there's also a great sort of need of products there, as of used cars in particular have become sort of less affordable for consumers, both as a function of sort of used car values being still very high, but also rates being the way they are. So that really impacted negatively the affordability of cars, of second-hand cars. and other products that are less sensitive to credit conditions, such as home improvement financing, where it's mostly sort of homeowners making sort of decisions to sort of upgrade their home and sort of bring these improvements. These are typically less subject to variations in credit performance as some of the more sort of mainstream unsecured products like credit card.
Fantastic. Yeah. One of the things that has differentiated fintechs, perhaps from traditional FIs, has been their ability to pivot, change more quickly, strategically, be more agile. And maybe to think about this question, has that changed at all? Have you seen more traditional FIs catch up to the fintechs? How does the fintech pivot when they need to? As an entrepreneur and a CEO, obviously there are market conditions that force you to react and change things, but there are also times where you say that you have a hunch or a sense as a CEO, as an entrepreneur, that you want to offer a product or pull back a product. And so maybe just to combine two questions, where have you seen or where have you implemented that sort of CEO feel to pivot from a strategy or to change strategy? And have the more traditional FIs caught up to the fintechs in terms of their ability to be agile in that way?
Yeah, and certainly banks are catching up, and that's good, generally good for consumers, right? Banks have better technology, better user interface, better user experience. And like if you look at the mobile app from Chase, it's I think there's nothing to I mean, it's not anywhere, it's not behind any fintech mobile app. I think where we continue to have an edge is in terms of flexibility, ability to react, anticipate market trends, and act on it. I think we continue to be a lot more nimble. So talking of pivot, I mean, it's when we saw sort of rates going higher, you know, that we sell loans to a variety of loan buyers, including small banks and credit unions. And the small banks and credit unions had sort of harder time sort of gather and retain deposits as rates were moving very quickly. And then you got this of Silicon Valley Bank and First Republic crisis on top of it that sort of damaged the brand of smaller banks and made it look less safe to keep your deposits there. And a lot of our partners are really sort of having a hard time sort of getting these deposits. So that's when we launched our savings account, and we're not a bank, we're not gathering deposits and keeping them on balance sheet, but we were able to, in partnership with Cross River, really sort of establish a sweep program that would where we would collect deposits and then sweep, Cross River being the custodial bank, and then have sweep relationships between us, Cross River, and a number of partner banks that were in need of these deposits and could use these deposits and in turn to sort of resume their own lending and even sort of buy loans from us. So I think this ability to quickly find a new process or new solution that would sort of alleviate some pain in the market and sort of meet either a partner or a customer need and put all that in place pretty quickly, I think continues to be a strength of fintech.
Yeah, of course. And I think one thing is that when you're innovating as a new company, as an entrepreneur, you can do that for a new product or a new market product, but certainly there's room for innovation within an existing category, and you've done that really well at Upgrade. And so I want to spend a minute talking about the One Card story, and maybe you can give us some background on how the One Card came about at Upgrade and sort of how that evolved over time.
Yeah, so so before One Card, we had like Upgrade Card, which was already a pretty innovative process whereby we said, okay, credit cards have this issue that they're sort of keeping people in debt for too long. It gets very expensive. A lot of people make the monthly minimum payment. How can we make that better? So we came up with Upgrade Card, which is more of an installment card where every balance turns into an installment that people pay down every month and sort of do get out of debt every month by paying down principal and interest or straight line amortization. So I think it's a better consumer product. So I think that's the kind of innovation we like to think about, where it's hitting multiple targets and certainly making our customers' lives simpler and their finances better.
Yeah, definitely a customer first approach. So maybe in that line of thinking, when you want to innovate within product, you mentioned before you're not a bank, and so you need a partner bank that can actually support that. And so when you think about the evolution, you've gone through a number of partner banks in your experience at Lending Club and certainly now at Upgrade. What are the things you would look for in a partner bank? Innovation being one of them, but what are the most important things maybe in rank order?
Yeah, I mean, I think it's like everything you'd sort of expect from a great partner, right? So you want that relationship to be predictable, to be reliable, to be fair. I think I'd say most of all, want to have open communication, right? It's really the sort of fundamental tenet of a good partnership is having this open line of communication where we on both sides we feel like we can and we should talk about anything that happens in the business, give as much visibility and predictability, and talk about issues openly and sit down and resolve them. And that's certainly what we've sort of experienced with Cross River, and has been really sort of very rewarding in terms of the relationship and the business possibilities that opens. Because when you have that solid foundation, you really feel like you can do the other things. You can innovate and you can grow and you can do all these good things, but that need that solid foundation to start with.
Yeah, communication is definitely key, and we've appreciated that partnership over time for sure. Two more questions. There's some some listener questions that have been submitted. I want to get those as well. But two more questions for us to cover, and maybe being more predictive, to the extent you can be. You mentioned before you've offered a number of different consumer products. You've done deposits and you've done innovations in card and personal lending. I know in the past, certainly you've done auto and other forms of lending, both at Upgrade and Lending Club. What other areas of innovation are there related to the consumer specifically you think are on the horizon for fintechs to tackle next?
Yeah, so I don't know if I think we're now covering, and I say we, like FinTech is covering a very wide range of products. So I don't know if there's much sort of new product area, existing product area to make better. I think mortgage is probably one that hasn't improved as much as in other categories. You haven't seen as much innovation. Certainly highly regulated space, but there's still room for innovation there. I think we'll see more happening in that space. I think where you'd see a lot of innovation is at the intersection of this product, and so with better integration of the payment flow with credit, with e-commerce. It doesn't have to be a super app in the sense that it doesn't have to be this universal thing that manages your entire life. It could be a specific vertical, it could be a specific use case, but that tight integration between e-commerce, payment, and credit, I think is what's gonna unlock a lot of value, business value, but also really sort of simplifies the lives of consumers by not having to go through multiple apps, multiple steps to get whatever they're trying to get done. I think that sort of tight integration, single flow is what's going to be a sort of a hallmark of future fintech innovation.
It's a great point. So one final question before we go to the submitted questions. No doubt in the current environment, there'll be some companies that kind of go away or that fall away. And some companies will take that volume, some companies will succeed. If you think about the things that will drive success for the companies that are successful going forward, some companies will have access to the public markets. You've been a CEO of a public company, some are moving private, some have better capital stacks. What in your mind are the things that will differentiate the companies that will be successful and sustain themselves over the next 3 to 5 years?
So I think it's going to continue to be the one thing that makes companies successful. It's people, and it's easy to lose sight of that when we talk about technology, we talk about AI, we talk about a lot of things that feel new. And I think the sort of old truth that sort of greatest assets companies have is that people continues to hold more than ever, I would say, and as of talent really sort of continues to be at a premium. And I think, I mean, and that's the advice I give to every fintech or tech or general entrepreneurs who cares to listen, is really sort of focus on the people, focus on expand a large amount of your time recruiting and making sure sort of employees have the tools they need to do their job and feel empowered and can make good decisions. Because at the end of the day, that's what's going to drive everything that makes a company successful.
Yeah, well said. And you hit a buzzword, which I'm going to ask your first question on, which is AI. And can't go through a webinar or an interview without talking about AI. And maybe for a minute, talk about the impact AI has had on financial services and sort of how Upgrade utilizes that AI.
Yeah, so I mean, certainly a lot of excitement there, a lot of possibilities, and I distinguish between sort of predictive AI that we've been sort of using for a long time in credit models and marketing models, and sort of generative AI, where there are sort of newer applications, and certainly the technology has caught up very quickly. Where so we're in testing mode, I think, as a lot of other a lot of our peers. We're testing some sort of coding copilots, right? GitHub copilot that supposedly would help engineers be 10 times as efficient. I don't know if we're seeing quite that yet, but certainly seeing some productivity gains. We are testing some chatbots with generative AI capabilities. We're sort of designing a sort of similar copiloting experience, so copilot AI humans in sort of loan servicing and underwriting. So I mean, and as you can sense, that's been our stance, is really to sort of do a lot of testing with a lot of sort of co-piloting and not give anyone the keys of the car just yet, but sort of really be cautious, but also excited about these innovations.
Yeah, it'll be fascinating the next 3 to 5 years to see how that evolves, but certainly keep our eye on that. Maybe another question that was submitted. Again, left it till the end because it's less exciting per se, but it's hard to ignore the current regulatory environment. You see the number of actions that have come out from regulatory agencies, all different agencies against banks, fintechs, otherwise. And so how do you think about that changing landscape and sort of how to combat that and how to compose with that? Obviously, it is where it is, and it will always change and kind of go up and down. The pendulum swings pretty wide. And so when you think about running a company, working with banks in fintech, how do you compose with it, and how do you plan for it?
Yeah, I think a lot of it is a matter of making sure you have the right resources and the right process, and of taking compliance seriously from the get-go. And it, to some extent, doesn't depend what administration is on the other side and what the budget of the CFPB is at any given point in time. I think that shouldn't be a factor in making good decisions and making sure we are sort of fully compliant and have the right team, and the team has the right tools to get it done. And so we're continuing to automate processes, to sort of invest in new tools. We announced recently a partnership with Fairplay that's really helping us using AI to sort of help with sort of disparate impact, Reg B, and all this type of issues. So BSA, AML, obviously very, very sort of strong focus as well. So yeah, I think the right mindset is really to sort of invest enough to turn compliance into not just a sort of check the box item, but really a competitive advantage, because it can be once you're at the right place and properly resourced.
Absolutely. Turning challenge into innovation is key. So I know we're almost out of time, and I want to leave you with a final question. And I certainly want to mention that I'm appreciative for both the time you gave today, as well as the ongoing and wide partnership between Crossover and Upgrade. But perhaps maybe just one parting question. If you would leave the audience with something that if we talked in a year from now, the economy will be different, perhaps capital will be different. What should we expect forward in a year from now? It could be about Upgrade specifically, or maybe more broadly about the economy.
Yeah, so I mean, I'm optimistic. I don't think you can be an entrepreneur without being optimistic. Right. So yeah, I certainly hope we will be in a better place in a year from now. I think a lot of things would have played out by then, including the elections, including this weird place we're at in the economy now, where you don't really know what direction, or you know what direction the rates are going to go. It's probably nowhere to go but down at this point. But when sort of the first rate cuts appear, and the sort of pace of rate cuts is very much unknown. I think we'll have more visibility at that time. We'll see if the economy really achieve that soft landing we've been talking about. So I think a lot of the sort of current uncertainties will have been resolved. I'm sure we'll have new uncertainties to deal with, as always. But it's I think I feel pretty optimistic both about fintech's ability to sort of continue to grow, get market share from banks, continue to increase the size of the pie and create new products, not necessarily taking market share from banks, but net new products, net new opportunities that make sort of consumers' lives better, simpler, and more rewarding. And also equally optimistic about Upgrade's sort of ability to be a major sort of factor in this trend, and continuing to innovate and help our customers sort of move in the right direction with responsible and affordable products.
I agree with you 100% on the broader point, as well as Upgrade as well. So really want to thank you for being with us today, Renaud Laplanche from Upgrade, and thank you for the time. And I'm sure I speak on behalf of the entire audience and thanking you for your valuable insight.
Thank you, Adam.
Thank you, everyone. Have a good day.